12th past seminar. My name is Qiang, and I'm the Associate Head for Research at the School of Accounting and Finance, Hong Kong PolyU, and I'm also the co-director for the CCF Center. Today is our 12th seminar. So today we dedicate our talk on Chinese carbon neutrality 2060. It's a very timely topic. So we are so delighted to have three extraordinary speakers, both from academic and industries, okay? Hopefully they will give us the new insights on this topic, okay?
Let me quickly introduce our next couple of speakers. So we'll have, can you open your video, please? We have Ms. Jingwei from Associate Director from Sustainable Fitch, ESG Research. Hi, Jingwei, good to see you. We will have, thereafter, we'll have a presentation from Mr. Jeff Huang. Jeff Huang is the CEO of AEX Holdings. He was a former VP for Asia for the Chicago Climate Exchange. He was also a former managing director of the International, so a lot of experience to talk with us about carbon trading in China, the process, the role of Hong Kong in there. So we'll look forward to Jeff's presentation, and that will then be followed by a panel discussion with Jeff, Jingwei, and also Nneka Chike-Obi, also from Sustainable Fitch. But before we go there, let me pass the floor to Jingwei. She'll talk with us about, we'll go deeper into, so we talked about strategically, comprehensively, what can China do? Let's now zoom into sustainable finance. So Jingwei has written a lot of research notes, and I was reading the one from 22nd of April about the state of sustainable finance in China. I'm really interested in that. Let me share the slide. My understanding is definitely green bonds are taking off, but what about sustainability linked loans, the other parts? Who are the issuers? How does it a bit link with what Professor Chen was saying in terms of the N+1 climate policy framework? How does everything link together? Let me share the slides and over to, let's see if everyone can see the slides. Can everyone see the slides? Yep, I'll hand over to you, Jingwei. Looking forward to your presentation.
Thanks, Lapman, for the introduction, and hello, everybody. Good morning. My name is Jingwei, and I'm Associate Director here at Sustainable Fitch. So as a ESG research team, we'll conduct research cross-sector, thematic, on certain ESG topics, and trying to look at the credit relevance on this issues to the ESG industry. So I'm very happy to be here today. Just to give an overview about my research. So I am the primary analyst that have the focus on China, which has been seeing so much progress in the past few years. So for my presentation for the next probably 20 minutes, I'll briefly cover what has been happening in the Chinese sustainable finance market, the market participants, and how the green bond loans interacting with each other. Next slide, please. Great. So as Professor Chen also just mentioned, China's green finance sector has been very strong, seeing very strong growth. Starting from 2020, when we just had this climate targets coming from the President Xi on the 2030 and 2060. So the green finance sector is driven by very supportive government policies and initiatives. So we've been seeing an acceleration of ESG-related policies and initiatives in the past decade, as we can see also here in the slide. The financial and environmental regulators have been very active and taking the lead to set more specific policy goals to address the climate risks under the China's 14th five-year plan. So some of the major regulatory developments are being lined up here, but just in the recent developments, now as we can see from here, it includes the latest green bond taxonomy, nationwide environmental information disclosure system, or the launch of the national carbon market in 2021, and also the emission reduction lending facility from the central bank last year. Or we're talking about a lot recently on the release and published of the new green bond guidelines that just came out last month. So from our perspective, we think that more policy initiatives are on the horizon right now, as China will continue to work towards the climate targets for the 2030 and 2060 targets. Next slide, please. For the next couple of slides, I'm going to spend a few minutes to discuss the development of China's sustainable debt market, which I believe is also one of the most widely discussed topics these days for China's ESG market. So issuance in China's labeled sustainable debt market has already reached $65.5 billion in 2021, according to the data from Bloomberg. So green bonds stand alone already contributing $56 billion, accounting for more than 80% of the overall sustainable debt issuance. So China's sustainable debt market has grown rapidly in the past few years with the increasing diversity of the product types despite the setback in 2020 due to the COVID-19. On the right side, you can see the overall slowdown. We're trying to say that the overall slowdown of the global bond issuance in the first half of this year already affected the label bond market globally, with the overall issuance already down for about 20% year on year, considering the very volatile geopolitical and market conditions at the beginning of this year. But the momentum in China for the green bond issuance already continued very strongly for the first and second quarter of 2020, and the issuance in the first half is already about twice the size of issuance for the first half of last year. Next slide, please. A trend that we have noticed so far is that the financial institutions, particularly the Chinese banks, have been the most active green bond issuers on the onshore bond market in the past few years. However, we're also definitely seeing this trend is shifting very quickly from the financials to non-financial corporates and local government financing vehicles. So the corporate issuers are mainly concentrated in the sectors of power generation, construction, and engineering. As you can see here, the utilities already climbed up to become the biggest green bond issuers in last year. So in 2021, so the carbon neutral bonds also came out as a new type of a green bond that just appeared in last year, accounting for overall accounting for more than half the green bond issuance in China. And on the other side, sustainable linked bonds, the KPI linked bond already make an appearance in onshore markets, already reached $6.8 billion in 2021, and most of the issuance are coming from the corporates and the financial issuers. Another point I will also mention in our previous research is that for the Chinese onshore bond market, there's a very notable feature of the onshore bond market is the difference between the onshore and offshore market, with which both are following very different practices, regulations, and investor bases. And the issue for this difference is that the green bond that only follows Chinese local standards is still having a lot of differences compared to the internationally recognized standards. So the research, the nonprofit organization Climate Bond Initiative already noticed that 66% of the labeled Chinese green bond issued in 2021 are aligned with the definition of the Chinese standards and also the CBI standards. So this ratio is already an improvement from the 50% around the 50% in 2019, but there is still a lot of concerns over this disparity between the Chinese guidelines and international standards, such as how the proceeds are allocated to the green projects and how it is being used to supplement the general working capital. It still exists for the current bond market. Next slide, please. Also, we have mentioned that the government policy has been one of the major drivers in China's the GSS bond market. So that stands for the Green, Social, and Sustainability bond market. We also noticed that the provincial and municipal governments has been very active to issue the green bonds to China funds, most of the funds to address the climate issues and environmental targets. So these bonds are either issued through the general bonds by local government finance vehicles or the special purpose bond coming from the local governments. So a large portion of these projects are directly related to the local infrastructure projects, environmental protection, or the low carbon transport projects. On the other hand, The social theme bond also growing as a proportion of this GSS bond in China. So the proceeds of the social theme bonds are largely used to fund projects that align with the UN Sustainable Development Goals, such as poverty elimination, rural infrastructure, and then public health care. So these social bonds mostly are still dominated by the issuers coming from the financial institutions. So if we're thinking about the policy banks or the state-owned commercial banks, and also corporates. As for this type of the issuers are better placed, they're at a better position to carry on the government policy mandates to channel those funding to the social projects in public education, regional economic development, or just the reduction of inequalities in the society. Next slide, please. The financial institution has a way, as we've mentioned before, including the social outlets, the state-owned commercial banks and policy banks are very incentivized to expand their shares in the green financing in China's onshore market. So our research, like a couple of years ago, already mentioned that the Chinese banks have issued green bonds to refinance projects in the low carbon transport, renewable energy, and the environmental protection, highlighting their roles, their position as both issuers and investors in the onshore green bond market. But on the other side, if we're just considering the role of the green loans, also playing a very critical role to funding the low carbon projects. The green loans extended by the 24 major Chinese banks have been picking up very quickly in the past few years. So outstanding amount of these loans has already increased by 40% year on year to the 19.5 trillion Chinese yuan by end of June this year. The outstanding green loan amount also accounts for about 9% of the bank's overall lending portfolios, and majority of these loans are corporate loans are dedicated to the green infrastructure, clean energy, and sectors in the environmental protection. So policymakers are increasingly using the monetary policy tools to promote the lending to the decarbonization projects. So there's the new policy that the new lending facility tool that just came out last year from PBOC. It's called the Carbon Emission Reduction Facility that was launched by PBOC last year that allows the major banks to lend to the qualified carbon reduction projects at a loan prime rate, and then they can receive 50% of the project's principal from the PBOC at a cheaper rate as a way to incentivize banks to expand their lending to these low carbon projects. Also, the banks are also very increasingly subject to regulations to review their climate risks as a potential threat to the financial market stability and to consider the possible default risks of borrowers in the carbon intensive sectors that coming from the climate risks. So PBOC in the last year also complete the first phase of the climate risk stress test on the major 23 banks in 2021, mostly focusing on the thermal power, steel, and cement sectors. Next slide, please. So for the last slide here, I want to really just be talking about the current development of the ESG standards and disclosure rules that have been in a lot of discussion recently, and also just quickly driving the agenda on the ESG investment. So for now, China still follows a voluntary ESG disclosure reporting system, whereas listed companies are encouraged by their stock exchange, by the Shanghai or Shenzhen stock exchanges to report the major environmental information from their business operations. So from the January 2022 this year, the Shanghai Stock Exchange already encourages listed company to disclose the business operations regularly on the environmental protection information and also the social responsibility section. The rules from the environmental regulators on the corporate environmental information disclosure that just came in fact in February of this year. So the measure sets out the first set of the mandatory environmental disclosure rules for the Chinese corporates from the high polluting sectors, and is a very initial step towards establishing a nationwide disclosure system by 2025. And also previously already mentioned the disparity of the Chinese green bonds following the different standards, where the Chinese guidelines may be a bit off from the commonly accepted global standards. And this already indicates that the bond may be a lot of the Chinese green bond that issued in the onshore market may not meet the global standards and may already given a false impression that the bonds are being used for the environmentally sound projects. But this has been an area that we are also following very closely. So just a few weeks ago, China already published the new green bond principles that make reference to the ICMA's green bond principle. That is, so ICMA green bond standards is a set of the standard have been commonly very widely accepted globally. So the major objective of doing that is to provide a clear definition on what can be labeled as a green bond, and also require the 100% of the proceeds to be allocated to the green projects. So for our perspective, this definitely is a very positive development for China's green bond market, as it helps to enhance the transparency and the green bond structure and the information that are available to the investors. On the other front, the development to build EU-China Common Ground Taxonomy is still continuing. So the first publication from the Common Ground Taxonomy is a document that compares the commonalities between the taxonomies of EU and China. For now, it covers a substantial contribution criteria only for the climate change mitigation, and it does not present much of the legal implications in either of the jurisdiction. However, we do believe that the incorporation of more sectors or more climate change adaptation activities over time will help to improve the document's usefulness to the investors and issuers, and also to help to identify more of the gaps within the sustainable finance approaches between China and other major economies. At the same time, so we're also working with various market participants to come together with a document that will help to illustrate how some of the user cases of the EU-China Common Ground Taxonomy that can be applied to the broader international green bond market. So at this point, we're seeing that the divergence, between the international standards with China will persist in the near term, as the capital markets is developing very quickly in the field of ESG. However, we do, as we also discussed before, the efforts to align with international standards could also help to reduce some of the non-alignments in some of the key areas, such as the new green bond guidelines that we just mentioned earlier, and also the possibility to adopt the ISSB for the ESG information disclosure rules in China are also currently in discussion. A lot of these efforts will also help to promote the domestic green finance activities among international investors, and to a broader extent to help to open up China's onshore green bond market and also the capital markets to a certain level. So that's all from my side, and definitely open to more discussions in the following session and the questions. Thank you.
Perfect, Jingwei. Thanks very much for sharing. This is very inspirational. There are many topics that I think will inspire questions that me or the audience will have down the road. And for example, I'm also interested. So I'm hearing divergence in terms of the standards being used, and obviously, if I'm an international investor, I would like to know what's the use of proceeds of the instrument that I'm investing into, and I guess that is also playing hand to hand to the Chinese issuers wanting to attract an international investor base as well. So I'm hoping that at some point will come. But it's good to hear what you're saying about the green bond guidelines in line with ICMA being published. So probably more new issues will follow that, and at some point, hopefully, China will also follow the ISSB framework. Probably later questions, just to a heads up. I probably want to know more about later on about how do the 2043-24 banks incorporate ESG consideration into lending overall. And I guess with the 1+N strategy, I saw in one of your slides you said that the municipalities are becoming a force in terms of issuer. I'm wondering, but I'll ask you that later on again, is that because they have their own plan under 1+N, 1+ for different ministries, and then the municipality probably want to show progress as well? So I might ask you that later, but no, excellent presentation. And I saw a note also in the chat box from some people that were testament to your good presence. So I'll hear from you during the panel, and thanks a lot, Jingwei. And let me now go over to Jeff. Let me stop sharing. Hi, Jeff.
Hi, Professor Lee.
Hi, Jeff. Really great to have you here. I mean, you have a lot of experience in the carbon credit trading space, both ICE at the Chicago Climate Exchange, and now as CEO of your own firm, AEX Market. So we're really interested to hear about your presentation about what are the steps to, in my view, is what are the steps towards efficient carbon pricing? What is the role of Hong Kong versus, say, a Beijing or other cities and exchanges in China? So we're really keen to hear your presentation, Jeff.
Thank you so much, Professor Lee, and thank you for inviting me to spend a few minutes on my kind of a personal involvement from a practitioner perspective of carbon trading. And my topic is really going to focus on pricing, right? Efficient carbon pricing. Can you see my slides?
Yes, I can.
Okay. So it was interesting to hear Professor Chen in her Q&A talking about 价格机制, right? Pricing mechanism for coal and electricity. So hopefully these steps I'm going to highlight today towards efficient carbon pricing will also apply to efficient coal pricing, fuel pricing, natural gas pricing, and electricity pricing. Because for carbon to work, for specifically in this case for ETS to work, for cap and trade to eventually function in China, I think these few pricing and carbon pricing need to work together, unlike the historical trajectory in, for example, Europe and North America. So I will be highlighting these four topics, right? So let me just close this. Hold on, let me just. So the backgrounds. I'm not the backgrounds. Professor Chen mentioned the ETS. So July this year, the national ETS is exactly 1 year old. It was traded in Shanghai Energy and Carbon Exchange, right? Was close to 200 million tons in the first anniversary of spot carbon allowances, covering 2,200 compliance power sector companies. Professor Chen mentioned in the future, 7 other industries, building materials, petrochemicals, steel, aviation will be included in the ETS, but nobody knows timing. But for ETS, let's just take a look at the power sector ETS, national ETS alone. It covers already 4.5 billion tons, which is twice as large as the economy-wide EU ETS, right? Which is 1.6, 1.7 billion tons, right? So from a practical trader perspective, right? I keep saying for cap and trade to work, both cap and trade need to function, right? So trading, how do you price 4.5 billion tons of carbon allowances, right? That becomes a present and clear and present challenges. If you don't price this efficient and effectively, if you don't have a price forward price curve that goes out hopefully to 2030, right? Why bother with trading? Why bother? Why don't we just go back to taxes, right? Carbon taxes, right? There's a question about carbon tax. The biggest problem I have personally with carbon tax is you can tax, but carbon could go up, right? Cap and trade theoretically would cap the sector-wide or hopefully eventually economy-wise carbon emissions. So for sure they're going down as far as the absolute cap is concerned, right? Now we don't have an absolute cap. We have intensity cap in China. So that's a something I would want to go into later on, right? So eventually, if you lump all these 8 sectors into the national ETS, it's going to be 7-ish billion tons in total, covering about 60% of the country's total carbon emissions, right? So 2 problems today, or 2 challenges, I should say, right? Going forward, how do you improve the data clarity? I'm talking about carbon market data clarity, right? And number 2, how do we improve efficiency of the carbon pricing? And, so if you say, oh, well, you need to do a carbon efficiency pricing, price discovery and hedging, everybody in China, in financial market in China, oh, we need a futures market, right? China commodity futures in China has existed and functioning for 30 years, right? So people said, let's do carbon futures. But my argument in the limited time I have today is we need to price carbon, to price electricity, to price energy fuels, coal or natural gas. We need a different style of futures, commodity futures in China. I call it commodity futures trading 2.0, right? So what's my beef with data? Over the last 12 months, right, I talked to commodity traders, energy traders in Singapore, Shanghai, not Hong Kong, right? Not yet. Chicago, right? And Shenzhen, right? They say, hey, Jeff, this is national ETS, is huge on the number of allowances. We would like to play a part in this market for price discovery, for trading, to provide sophisticated institution liquidity, right? Not retail, mom and pop, right? So I said, why don't, other than, the regulator most likely the next few years will allow these financial guys to open up accounts in the registry, right? They are telling me, Jeff, registry is not real problem. I know the government will eventually allow us to open up an account, right? And if we trade futures, derivative, right, sometimes you get cash settle, blah, 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 right? But data, clarity data, they told me this is the biggest problem with them. In natural gas, in crude, even in power, right? In corn, in rebar, steel futures market in Shanghai, Zhengzhou, Dalian, they can make reasonable estimation based on historical data, right? The supply and demand, the balance sheet, right? In carbon, they said, I don't understand the intensity-based emissions, right? Everybody else in Korea, EU, North America is absolute cap. So in order for me to understand, they're telling me, in order for them to understand, that the intensity baseline for different industries, for the same product with different processes and different equipment, the regulators in China spend enormous, unproportional amount of time just to get right these baselines. So it's market works. What market design is as simple as possible, right? In principle, right? So you have these intensities. So the traders, this sophisticated institutional trader, have no idea how do you arrive at a balance sheet, right? And that would deter them from participating. So that's, if these guys, other than the compliance company, right? In any energy market, you need institution to come in and sit on bid and ask, right? To help take the risk off, help the compliance company, the power company, the steel company, offload the risk to these financial guys, right? So if you don't have them, market liquidity is very difficult in March, right? So I'm just talking from a very narrow, I don't want to get involved in the political discussion about intensity or absolute cap, relative carbon reduction, absolute, so I'm just give you a very practical point of view. So if you look at this data, look at these, let me just move this. If you look at these charts, right? So this is the EUA chart going back to the last 5 years. So you can see from 2017 to 2022, July this year, right? The EUA price, the European carbon ETS, right, went up from €5 per ton to 96 per ton. Over the 5 years, the price is going up over the last 5 years, right? So if you're a utility in EU, hopefully in 2017, you would have done something, right? You would have done something in terms of hedging your exposure in 2022. You don't have to wait 2022 and buy the carbon allowances at 96 euros, right? 2027, 2018, 19, 20, 21. Over the 5-year, hopefully longer horizon, you would have built your hedge position so that, you know, when the real risk happens in 2022, you would have hedged a large, hopefully, amount of your position over the 5 years already. So this is pricing and hedging, right? You need that 5-year curve like this. You need a 5-year curve for carbon, right? And to provide this neutral, independent, and transparent trading, so these compliance companies could start to make long-term financial planning, right? Long-term financial planning, so you have visibility on the price in the 5 years. Imagine, right, as Professor Chen said, 价格煤电价格机制, right? Imagine you have a 5-year coal curve, power curve, natural gas curve in China. You don't have to wait at the end of each year. You don't have to end of next year. You know, you would have this financial market demonstrating, giving you these 5-year curve. So as a utility, as a power buyer, right, as a retailer, you will start to build your hedge position so your risks are spread out over the 5 years, you know, hopefully longer, right? You need these price discovery process. So the challenges, right? The challenges, we all know the opportunities, right? The challenges for China to price carbon or to follow the logic of Professor Chen, to price coal and price your power, right? We're talking about today, the only sector capped in the national ETS is the power sector. So I'm, you know, kind of focusing on that sector alone, right? I think there's 6 challenges, right, that need to be addressed immediately, right? One is obviously the legal infrastructure, the legal foundation for treating derivatives and futures, right? So about 85, 86 years ago, the United States Congress passed the first futures law, right? So 80 plus years later, in April this year, the People's Congress in China passed the futures and derivative laws, and in August 1st, right, last month, the futures law was became effective. So there's a lot of international accolades about futures law, right? I'm just single out the close-up netting as an example, as a milestone. For the first time, the court in China would recognize close-up netting, the enforceability, right? That would make international traders easier, making these traders to give them easier access to derivative market in China, to work and trade with Chinese counterparts, right? And I just want to also at the same time I applaud the futures law, right? I was consulted before the law was in drafting sessions, together with other commodity futures experts in China. I just wanted to point one things that I would like to see improved in the future, right? Which is exchange transparency, right? Exchange needs to be neutral. Exchange needs to be independent from the regulator. But the current version of the futures law still have not sorted things like this out. And hopefully the next version, this will be sorted out, right? The second challenge is accounting. You know, I'm talking to a lot of accountant accounting professionals, right? I just want to mention this new rules by the Minister of Finance, right? New rule, hedge accounting rule number 24, right? It's a new version of hedge accounting, right? The utility sectors, right? The power sector in China, the biggest challenge, one of the biggest challenges for them is if I, as an SOE, I trade futures, I trade derivatives, right? If I don't have a clear accounting framework, what I lost on paper in the hedge positions to protect my physical positions, my supervisor would not take a look at my physical position. They would just accuse me of making a loss on trading futures. So no SOE would dare to do that. So now we have this new rules. Hopefully, in that rule will apply, will be applicable for the power sector companies to be better prepared to enter the market and to be a major force in carbon price, allowance price, price discovery. The number 3 challenges is the institution and versus retail trading, right? The EUA, as I said, it is very, very robust, has a very robust benchmark in Europe on 2 competing exchanges, right? It trades about 2 billion, it has open interest of 2 billion tons. Most of these open interests are built by institution institution players. So institution participation in the derivative, in carbon derivative and futures trading is key, right? It's fundamental, right? It cannot be a market dominated by retail. But you know, if you look at the commodity trading 1.0, the version in China today is hugely dominated by retail, or retail has in a proportional large trading volume, a daily trading volume. So I have the data, the newest data I have from the International Research Institute is the open interest on 80+ exchanges from 30+ countries. In total, is let's say 1 billion tons, right? 1 billion lots, I'm sorry, 1 billion lots. This includes financial futures and commodity energy futures, right? In China, you know, we're the 2nd largest GDP, economy, but our share of that institution measurement is less than 3%, 32 million lots. So my argument is that if you build robust and institution-dominated carbon and power and fuel trading in the futures, this percentage could easily go up from 3%, I think, to 10%, right? So institution participation is a key. Number 4, with institution participation, then you can build a 3 to 5 year power curve and carbon curve and fuel curve, right? The idea is to let market provide those price signals, so you don't have to 拉闸限电 each year, right? You can build your position to hedge your coal, your power, and your carbon. Eventually, the sustainability of a power generation units company lies in the fact that it keeps making money, and at the same time, that energy transition, you're phasing out coal and getting more into your renewable. It's all about leveraging market signal, hopefully going out to 5-10 years, not command and control and 拉闸限电 at the end of each year, right? So that's the curve. Number 5 challenges is to build a legitimate futures market. I'm not going to dwell on this. You need price convergency between the futures price and the spot price when the contract expires, monthly contract or seasonal or yearly contract. There's a lot in that aspect that needs to be improved or can be improved in China, in Chinese current version of commodity trading. So you have better price convergencies, and that will enable the compliance companies, the real economy, 实体经济, right? Real economy firms to better participate in your carbon derivative futures trading. right? Number 6, it's really, again, I came from a exchange background, Chicago Climate Exchange, Intercontinental Exchange, ICE, right? Both companies, both exchanges were formed by entrepreneurs. And they came into a hugely competitive space of exchange operators, right? So CCX was the first exchange that lists carbon futures, maybe 20 years ago, right? 15 years ago. And ICE today is the dominant energy and carbon futures platform, regulated platform. So I would certainly urge practitioners, regulators to pay attention to the entrepreneurial spirits, competition, vitality, getting people involved, make a bottom up, not just top down. In China, in Asia, we're very used to top down, in a paternalistic culture, right? But market works better when you have grassroots, bottom up initiatives. People like entrepreneur coming in and make a play, right? So in conclusion, know your clients, right? So again, this is another version of building a market from the bottom up, grassroots. At AEX, our partners in China, we spent a lot of time talking to these power companies. What are your needs today, right? Trading power, analytics, data, and carbon, right? That's why we formed this OTC trading simulation lab in Shanxi. Shanxi has 35% of renewable today, right? Professor Chen talked about the 56% of coal, but in Shanxi, in Shandong, right? Shandong has 26 million megawatt capacity in distributed rooftop, distributed solar alone, 24 million, huge capacity, right? And they're building a deregulated spot trading. How do you help these guys, right? Making more money, better protect your risk, price volatility. In Shandong, the wholesale market price, power price can be negative, right? So, and that can be $1 too, $1. So you got to help these guys. You got to know their risk exposures and build your services around these guys, right? And opportunities, to price the power sector carbon alone efficiently, right, with institution participation. This easily is a market of 40 to 50 billion tons trading volume per year, right? This, as I said, trading is a means, not the end. The end is helping this compliance company to make a 5-year financial planning today, right? 5, 6, 7 years, right? So to leverage the financial market to better protect and manage their exposure for carbon futures, carbon allowances, right? That's the goal, not about trading volume. But the collateral benefits for traders, obviously, this is a 50 billion ton a year. So I would argue, right, for places like jurisdiction like Hong Kong, the one of the top financial centers in Asia, right, and very close to China, has a great connectivity with the Chinese energy markets, both from the equity, bonds, stock connect, and now hopefully in the future, we'll build a center of excellence in Hong Kong for commodity trading 2.0. And then so with 50 billion tons a year, the 8+H carbon future architecture, trading architecture, I think Hong Kong should capture at least to 20 billion tons, right? To help and nudge China into the 21st century carbon trading with the existing top-notch financial infrastructure in Hong Kong. So you have 20 billion ton traded in Hong Kong, 30 billion ton traded in Guangzhou Futures Exchange, right? So together, this could build a vibrant market, right? So the compliance company today, again, it's all about 5-year curve, right? In a regulated setting. In China, it's regulated by CSRC. In Hong Kong, it's regulated by SFC. So we have a regulated market that have 5-year curve. So these compliance company could start planning today. Thank you.
No, thanks very much, Jeff, for your passionate sharing here. It's definitely good to hear already about it. You said Hong Kong, Guangzhou can each take a big portion. Yes, there are some clear and present challenges. You talked about the importance of the of data in the price discovery. Really, thanks for that. Let's move into the panel discussion. And of course, in the audience, I see various questions coming up. Very quickly, there is a poll question where we're still attending. I think that's going there. Just checking on some. I will. Chi, can you put on the general slide for the panel discussion, please? And then could Jingwei and Nneka, if you're there, can you please open your video screens so we can start the Jingwei, got it. Is Nneka there already? Maybe not yet. Maybe we'll get started first while we wait for Nneka to join, if that's okay with you. So I think it was a great presentation, I think, from everyone. The academic speaker, Professor Chen, Jingwei, about the Chinese landscape around sustainable finance, how that is going, and Jeff around specifically around carbon credit trading, the role of Hong Kong and other places in there. Oh, can you still see me? Okay, great. And so maybe let me start with Jingwei. So Jingwei, you talked about a number of things, and one thing that really popped up in my head was you talked about standards, and I saw the word greenwashing. I think that's Nneka, right?
She's coming in.
Okay, no worries. So yeah, maybe we'll start with yourself, Jingwei. You talked about international standards. You talked about greenwashing risk. Can you share a little bit from your observations in China? How are the Chinese standards? Well, maybe I don't know where that's right. How do the China standards tackle greenwashing compared to maybe international, or when people say international, probably US or UK's other standard? Can you shed a bit light around that, standards, greenwashing, basically how comfortable should we be or not be with those standards?
Yeah, absolutely. I think it's a very interesting question, because every time when we're getting, having any kind of conversation with the investor, everybody will be asking, the standards are having so much difference between China versus international standards. And I will have to say, the Chinese green bond market has only been developing for really just being appearing in presence for it in the past 5 years. So there definitely is a learning curve for a developing market like this to pick up, take some time to pick up. And absolutely, and I think just from the policy perspective, in the past few years, we've been seeing a lot, especially in the past 2 years, we've been seeing so much progress just from the regulator side. 2 years ago or just a year ago, the publishment of the China's green bond taxonomy from PBOC, and that was one of the big progress in removing the use of clean coal or the fossil fuel, and also trying to align with a framework of international standard, which it just really, the goal is to trying to provide more of the convenience for international investors when they are cross-tracking the issuance in both China versus the onshore and offshore market. And this year, there's new updates from the China's green bond guidelines. It's another big improvement, as in a way that this time it's specifically asking that 100% of the user proceeds have to be allocated into green bonds. Still, there are some, there's still a bit of a lack of clarity on how the working capital should be utilized or should be identified, and what percent of the working capital should be allowed under this system. That's our argument. Probably in certain ways, it can be manipulated by the issuers are trying to really to allocate a higher percentage of the user proceeds to working capital. But still, in the past, like a few years ago, we saw the regulations from NDRC was saying 50%, up to 50% of the proceeds can be going to working capital as in today. Is they definitely trying to start to tackle these issues with a more serious attitude, which definitely is a very positive progress. I mean, for the investors, because for when you're buying a green bond from Chinese market, it's definitely much easier. You need to identify how the proceeds are allocated, how to be reported, how to be managed the proceeds, which definitely is an improvement. But still, I think there's going to be a long way for China to continue the development in the next few stages, and still have to be with the corporation for the regulators to go hand in hand, actually to guide through how this issue is going to be addressed more properly and efficiently. But still, I think it's a very positive improvement from our side.
Got it. No, thanks for sharing. So does that mean that actually some of the green bonds in terms of use of proceeds are a little bit closer to a sustainability linked bond? Is that what you're saying, given that, is that what you said? Part of the proceeds could be used for working capital, general,
the working capital, it just means previous as a requirement for the Chinese local so from the NDRC was asking up to 50% of the working capital up to 50% of the user proceeds can go to working capital. That means it doesn't have to be exactly be used on the green projects, green related projects. It can just be as a way to supplement the liquidity of this project. So that actually raised a lot of concern on greenwashing, right? So when you're issuing a green bond, you don't really actually putting the money into the specific green projects, rather because using this for the liquidity issues. So that was a big concern in the past few years from the investors, and I think it still exists at this point for the current, especially for the onshore market. A lot of the times we're just looking at the issuance especially from local governments, that they have very limited information disclosed to investors, and they don't really specify, how much of the proceeds were actually.
I see. So,
yeah, definitely. And when this new green bond guidelines come out, it has a more specification on what types of green bonds now are allowed. What is it, a carbon neutral bond or a green revenue bond? It has a more specific explanation, which definitely helps, to increase the comparability and transparency for investors.
No, perfect. I mean, definitely clarity, transparency. I think that all builds trust with the investors, and that in turn will help evolve the markets even more. So that's great. I think and Nneka Chike-Obi, I think joined us. So can you open your video, Nneka?
Hi. Good morning.
Good to see you again.
Yes,
yesterday in the flesh, and now here over a webinar. By the way, do I pronounce your name correctly? Nneka Chike-Obi?
Yes, that's correct.
Okay, got it. Don't want to get that wrong. So maybe just for sharing. So far today, we had a presentation from an academic speaker, Professor Chen, talking about the bigger picture in China, about the roadmap, because the panel's discussion today is how can we help China to get to net zero by 2060? What are the opportunities? What are the challenges? And Jingwei was very kindly sharing about the sustainable finance market. We were just asking about the standards in China versus international standards, and how that impacts people's perception on, is there greenwashing, for example. And Jeff very kindly shared about the importance of price discovery and Hong Kong's and Guangzhou's potential for carbon credit trading. So, and maybe with that very short intro, I jump into a question for you, Nneka. So in the bigger picture, China, 2060 net zero, obviously there are the usual suspects, energy, metal, industrial. And in China, they have this, what was it? 1+N climate policy framework, meaning that, well, obviously, you know better than me, the different ministries will come up with plans, probably municipalities will come up with to roll up to meet the government's plans. From a sector perspective, what do you see happening in the, let's say, your usual suspect sectors? But what about the other sectors? What needs to happen for net zero in 2060 to happen? Maybe just a sector view, given that you've looked at many companies, more than me, definitely. So
Sure. One of the sectors where there certainly it is a sizable contributor to greenhouse gas emissions, but probably doesn't get as much attention is waste. So waste generation, landfills are a very, very significant source of methane. Methane is one of the greenhouse gases that actually has a stronger warming effect than carbon dioxide, but it lasts in the atmosphere for a bit less time. So while the methane is present, it significantly contributes to warming, but it dissipates a little bit more quickly. We started to see a lot more of governments paying more attention to the role of methane. And at the COP26 summit last year, there were a number of agreements across countries to really increase the amount of attention that's focused on reducing methane emissions. If we take a look at Asia, the expected waste generation in East Asia is the region with the most forecast growth in waste generation, according to the World Bank, going forward to 2050. There are pretty obvious reasons for that. Very large population here and a population that is becoming wealthier. And so as people are consuming more, they're obviously producing more waste. At the moment, waste landfills are about 1/5 of global methane production, and more than 1/3 of global solid waste is getting sent to landfills. In Asia, that number is actually higher. So the Chinese government has been taking steps to try to address this. The circular economy policy that was introduced in 2021 does attempt to address the use of landfills and encourage recycling. Closer to home here in Hong Kong, we also have a policy that's going to be coming in line in the next few years to actually charge citizens for disposing of solid waste. There's similar policy that's been in place in Taiwan for a number of years as well. So that's one of the areas that is going to be a really obvious place where we know there are negative environmental effects, not just from the methane, but just from having all of the solid waste generated in one place. It has health impacts. There's also the social aspect of communities that tend to be adjacent to these types of landfills usually don't have the economic power to mitigate the effects that the landfill has on their life and their health. So there are a number of ways where we can see that waste generation is going to be a big area. The bigger question, I guess, and this is something that China has an advantage because it is a government that has centralized planning, is what does this mean for the production of consumer goods, China being the world's factory, the consumer goods, the type of waste that is generated in the packaging and the way the products are sold and marketed. There may be a number of things that have to happen across the economy, not just in the decisions that households and companies are making about creating waste, but actually strategically looking at the use of plastics, the use of non-biodegradable materials in the products that are being sold in China and to the rest of the world. So that's a really big area. Maybe another area, another sector that doesn't get as much attention is agriculture. Speaking again about methane, rice production is a very, very significant source of methane. It comes out of the traditional method of flooded fields. There are a couple of countries, Vietnam has been quite innovative in trying to change the traditional rice production practices for farmers to reduce the methane emissions as part of their Paris Agreement climate policy goals. So that's another area that we could particularly see in China. At the moment, the growth in income leading to more consumption of beef means that a lot of the emissions associated with changing diets in China are being imported. And that's actually coming from activities that are affecting the environment in Brazil and Latin America particularly. So again, that does feed into as consumers become more wealthy, have more choices, want to live the life they see in films and TV, is there a question around whether or not we can make that also look more sustainable? Because the size of the population and the market in China is just so big that all of those aggregated decisions together can have a big effect as far as trying to reduce emissions for 2060.
Yeah, no, thanks for that additional viewpoint. I fully agree with that. I mean, I also come from a food and agri banking background, and I also see here and there are some technologies that can help with smart farming, and fully agree with you that it's also an attitude change. People want to consume meat. Do we go for alternative proteins, etc.? Maybe another question for you, Nneka, if I may. So I asked Jingwei about greenwashing and international standards. In general, given that you've worked all over the globe, worked with different markets, how do international investors view Chinese issuers, irrespective of whether they're municipalities, financials, utility? How do they view them from a green performance credentials perspective? Is there something that, and based on that, of course, we want to see how can we change that view if there's anything that we could improve. Can you share a little bit what you see overall from investors? Question that you tend to ask, so yeah, as lessons learned for us here to improve, I guess.
Sure. I think Jingwei was talking a little bit about the issue with some of the domestic green bonds in China and a large share of the proceeds being able to be allocated to non-green activities, other working capital and things like that. That certainly was one of the big questions that we're seeing from international investors. I would say the reality, to be perfectly frank, is that I don't think those overseas investors were willing to give those issuers the benefit of the doubt. So from their perspective, if they can see that up to 50% of the proceeds of the bond can go to general corporate activities, they would almost assume that some of those activities were not green, or potentially those activities were even harmful, right? If you take a power company, they would say, okay, well, part of their business has coal-fired power, so I'm just going to assume that the bit that they're not, that's allocated outside of the green use of proceeds may be going to coal or maybe going to oil or something like that. That may be unfair. I think the ability to have full transparency is a challenge. The Chinese issuers in the international markets, green bond issuers, are pretty well-respected companies. You have a lot of the Chinese banks, for example, are very big issuers in foreign currencies and things like that. Then you have other sort of challenges, right? The property sector is a sizable issuer of green bonds, but at the moment, the Chinese property sector is facing non-green related economic issues. And so that is going to play into, if you see green bonds coming onto the market from the real estate sector, that investor, the green quality of the bond or the issuer is probably not their first priority at the moment, right? So that means that there may need to be a little bit of change in the types of issuers that we see coming into the market, the types of issuers that international investors would be confident in. Another issue with some of the green bonds, particularly I would say in like large scale hydro power, those types of big renewable projects, is in North America, in Europe, investors expect to see a little bit more analysis into the myriad effects of that activity, as opposed to just saying this is renewable energy. It's great because it's low carbon. You could take large hydro and think about what is the impact of a large hydropower plant on biodiversity, on the change in land use, right? So the other E factors, not just carbon emissions. There's also things like social risks, displacement of people. How is that managed? Are people fairly compensated for being moved from a certain place? So these are the types of questions that I think international investors look for. And if green bond issuers from China, as they become more experienced in sustainability reporting and are able to disclose some more of that information and be clear what their policies and principles are, that will significantly help, because China is like any other large market. There are going to be some issuers who are best in class, but at the moment, it's very difficult for international investors to know who's best in class, because the level of disclosure and sustainability reporting is still a bit behind in China. So I think that's really it's just people don't know and they assume the worst. But I have a feeling that when more information comes out, the best in class will be more obvious, and that will give some confidence to the investors.
No, that's good to hear. Fully agree with that as well, and fully agree that there's also a component of education, raising awareness around, for example, what you said about hydropower. How does it impact more from a holistic view, different dimensions? And as people see that, and as they see more companies, issues providing that clear narrative around behind their issues, I think that would be great. Thanks for sharing. Let me go to Jeff. Jeff, I think you, on the one hand, it was very good, and I think it was a very passionate call for action from you around what we need, what we see, that there is a huge potential for Hong Kong and Guangzhou. But that's also for me a big jump from A to B between where we are right now, and I'm of course a bit selfishly looking from Hong Kong. what should Hong Kong's ecosystem, governments, we as academics, ESG rating agencies, etc. What are the hurdles for us to move to the next step to position us as a carbon credit trading center, taking that 20 billion of volume to Hong Kong? In terms, based on your experience, what should we do? What would be your recommendations, and who should take that action? I'm curious to learn a bit more from you, Jeff.
That's a great question, right? So I think it boils down to where the center of excellence for commodity, for carbon trading is in Hong Kong. How do we build a center of excellency, right? Certainly, government needs to be involved. The incumbent financial institution needs to be involved, right? The academia, the journalists, the students, the accountants, the lawyers, right? The raters, the rating agencies. I think this center of excellency has many stakeholders, as I said, right? So we need to look at this market, how the market evolves. How do we, as a rating agency, as a bank, as a trading house in Hong Kong, right? As a data and analytics shop, as a risk management specialty boutique, how do we learn? How do we get to know the customer, right? You need to know this. This is as much a top-down initiative as it is a bottom-up. I mentioned that we have this the OTC Trading Lab with 4 other online onshore companies. You got to start to get your hands dirty, roll up the sleeve from all different, from all different sectors to understand the present and clear challenges for the power company. And maybe next year for the steel companies, right? They still have a lot of policy needs, risk management needs, data needs, right? Accounting help. I mentioned hedge accounting, right? All these are what Hong Kong is good at, right? I think, over the last, fortunately, over the last 18 months, right? I've personally witnessed, I was in Hong Kong last month, witnessed these broad stakeholders' acceptance, acknowledgement that Hong Kong needs and will and should play a role, right? So I would start building some kind of a grassroots activities, getting the old company. Why don't we, the financial guys, the accountants, the lawyers, the academia, why don't we spend some time in Guangzhou, in the GBA area, right? Listen to their needs. By the end of this month, all the power company, generation companies in GBA, they will have 4 seasons, 12 months, continuous spot electricity trading, right? A lot of these units would use fuel. 20% of the electricity in the GBA is generated by natural gas, right? All these commodity asset classes, right? All these risk management needs, power and analytic needs, right? Accounting needs, legal needs. If you trade one-to-one over the counter, we need some, legal framework, ESTA or otherwise, right? So I think it's, we all know, in each silo, we all know what we should do, what we could do, right? Given the vicinity, given the closeness of the GBA markets, but combine the silos, build that new center of excellence for trading carbon, require government, require individual market participant, require people from all walks of life. I think, we should just start to build the first trade, right? The second trade. Why don't we see, we did the first trade in Hong Kong a year ago, CCER, Corsia's International High Integrity CCER, right? If the CCER restarts sometime this year or next year, I hope that all people in this chat room would work together to build the second trades, right? PolyU could use international standard high integrity CCER to offset your buildings, right? Your scope 2 or, So I think we should work with China, right? Help China increase from Hong Kong perspective, increase the standards of these offsets, of these carbon assets, and then provide the price visibility, the robustness of the financial infrastructure, right? And to bring carbon trading into the 21st century.
Got it. Really, thanks for sharing that, Jeff. I fully agree. I think Hong Kong, from my own personal perspective, does have, I think Hong Kong on the one hand has its strength in terms of product innovation. And I think China also looks at Hong Kong as a risk management center of excellence. And this really plays well into that strength. And one question that we got from Professor Liu that I'm reading here is, it's a bit related to what I asked. It's, for example, it says that, yes, Hong Kong is an international financial center with the right institutional foundation, but why has it not yet become a vibrant market for carbon credit trading? And his second question was around what's the role and prospect of renewable energy certificates in creating that vibrant credit carbon trading market?
Thank you, Professor Liu. I think the first question is very interesting, right? To build a functioning environmental markets, right? If you look at the United States, look at CCX, look at the carbon, the allowance, the offsets, the REC, renewable energy certificate, right? And even going back to 1993, right? The first emission allowances. The first emission allowance was auctioned in CBOT, right? The sulfur emission, the asset rating program implemented by United States EPA, right? Each one of these environmental asset classes would take easily 10 years, a decade, from birth to, trades to, learning by doing, to policy improvement, to financial market participation, to build that curve, right? And then to satisfy, work with NGOs, the environmental communities to make the policy and make the market rise, right? It takes 10 years to mature, to build up markets, right? So as Professor Chen and I keep saying, the education, not just the market participant, but all stakeholders, right? So I would say for the Chinese markets, carbon markets, we started 2013, right? It's going on 9 years now. But the regional pilots doesn't, many of these regional pilots don't have a derivative, a pricing market, a financial market, right? And then this national ETS is only 1 year old. So it takes time. I think we all ought to be patient. We all ought to be working on standards in education, in getting the first trade right? If you want to price it, get the first trade right. And hopefully Hong Kong will be playing a part of the first trade. We did the first CCER trades. I would hope somebody in Hong Kong would say, hey, we will learn to work, we would rally the troops, get all the financial specialists involved. We will build a first carbon emission allowance trade. There's nothing legally, nothing environmental policy-wise, right? Nothing financial market-wise that would stop somebody in Hong Kong to do the first CEA forward trade, right? So I just think that it needs to be done, right? It could be done. I would like to see it be done by the end of the year, right? Something like that, right? So regarding the REC, right? I think this is another example. I was in Hong Kong last month. I sit down with the stakeholders. A lot of these stakeholders says, hey, Jeff, we buy REC from international registry, right? We're looking at the Chinese government REC, right? We're just a little bit hesitant because of data transparency. We can't see the data. We don't know the vintage, right? We would like to buy something from China, right? That meets international REC standards, right? And then that has pricing visibility. Financial market is a big strength in Hong Kong, right? So if you get the standards, if somebody built a digital registry with all the bells and whistles, right? That would bypass this legacy registry, right? To better enable the buyers and sellers to track the data behind the REC from China, right? To improve upon the standards currently in China and work with the international communities and work with the tech community to build that registry, and so that the rooftop I mentioned Shandong alone have 24 million megawatts capacity for distributed solar, and a very large number of these solars don't have a subsidy, right? They could easily come to Hong Kong, work with the international standard community, get the registered on a DLT platform, right? That can track these data, maybe on a real-time basis, right? And then get the buyers in Hong Kong, the ESG buyers, to make them comfort to start to build that kind of connectivity and gateway between the ESG buyers in Hong Kong and then the suppliers from China. And eventually the supply chain, right? China is a big manufacturer. All the supply chain, you talk to the H&M, you talk to IKEA, you talk to BMW, they all like their supply chain, the suppliers in China to buy something that meets international standards. This is uniquely a role Hong Kong could play as a registry, as a next generation registry and standards could emerge in Hong Kong. And then if we mobilize the financial community and build that 3 to 5 year curve, we would have the first international standard reg futures in Hong Kong. Nobody's doing that, but we have a big supply and big potential consumer of international reg in China from the international supply chain and the ESG buyer in Hong Kong. Every piece of the puzzle is in there already.
Right.
Somebody, maybe Professor Lu, maybe Professor Lapman, you take charge, and together we built that infrastructure. We knew that infrastructure, the center of excellence in Hong Kong, to accommodate these regulated trading.
Very, very well said. Can I ask, in terms of government policymakers, who are actually, if there are all of these puzzle pieces, but who is actually in charge of making it happen? I know that there are discussions between regulators in Hong Kong, including the SFC. Who would be the decision makers to drive this forward, based on your experience? Actually, just curious who those are.
My experience is, carbon markets, offset markets, right? CCER or otherwise, VCS markets, and even the reg markets, right? It's not something new, right? From a policy perspective, from an international policy perspective, right? Domestic policy, from financial market practitioners' perspective. My thing is that if we got a bunch of accountants and lawyers in the same room, right? And then we look at the needs of buyers and sellers of each of these environmental asset classes, right? And then I'm not a policy guy. I have a trading background. I would like to come up with a legitimate trades. Once you have a legitimate trades in Hong Kong, right? One way or another, the accountants will come in and say, "Hey, you can't do this," right? Maybe they say, "Oh, you can't do it. We'll help you improve on it." The lawyers will come in, right? Will help improve. The government agencies will come in, and how can we better help you to make more of these trades? Or how can we help you to correct some of these deficiencies, both from a Beijing perspective or from Hong Kong perspective, right? So you can improve, you can better help the ESG environment, ESG community, the buyers and sellers, so we can make a more robust market. That's what I meant by bottom up, right? Doing the first trade. I'm not a policymaker. I'm the wrong guy to answer that question. But I know the policy making is there in Hong Kong. I talk to these guys, the consultant to these guys, right? So I know there's a will to do it, right? They need practitioners, financial institutions, and the buyer and seller to come together in the same room and come up with the first trade. You look at the first sulfur emission trades, you look the first carbon allowance CCX trades, you look at the first reg trades in the United States, right? There's a whole bunch of expertise you can draw upon, regulatory and practitioners, to make sure that what we're doing in Hong Kong is legitimate, that satisfy, that meet the needs, and that can be replicated.
Got it. Thanks for that. Jingwei, do you have any views, given that you focus on the Chinese market? Do you hear anything in a grapevine around the roles of the various cities in China in a bigger carbon emission trading journey?
Well, for the rules, I don't really think so. Because the way for my own research, so carbon markets definitely is also one of the topics we constantly been watching, and also learning from experts like Jeff. So being crossed, past a few times before the different events. It's definitely every time when I was hearing from Jeff, is already learning a lot for like the key issues at this point. Just from our research, just in the past 2 years since the launch of the national carbon markets, just be watching how the price is going, some of the key points to be watching for the next 12 months probably. I guess for this year, just like the CCER, the relaunch of the voluntary carbon markets is definitely going to be on the top list of everybody's watching agenda. And how that's going to be the dynamics of the supply and demand of this project going to be reflected on the pricing side. It's a point for us, for me personally, also to watch as well. And I guess this is a very interesting time at this point. Always, for our team members, other team members in the different markets, and the more the developed markets, also been closely watching the development in the EU ETS versus the China ETS, and you see the huge difference in terms of the pricing, the amount of allowances, and also how many sectors are included in this the whole trading system. You got to see how China is still far behind, and how much still have to be much of efforts to have to be made in the foreseeable future.
Got it. No, thanks. Maybe bigger picture global again, back to Nneka. So we had COP26, COP27 is, I think, November in Egypt. What can we expect based on your conversation with various market players in terms of additional commitment, or what is needed in terms of additional commitments to get us back on track, I guess, because I think the opinions differ how successful or not COP26 was, so it differs per person. What would your view going forward for COP27? Is there anything that China could do in there?
Sure. I think what a lot of people are expecting from the upcoming COP in Egypt is people are kind of calling it the adaptation COP. The adaptation obviously being how to create a resilient infrastructure and economy in the face of rising temperatures. So accepting that a certain amount of temperature increase is going to happen and making sure that you're prepared to manage that. In general, emerging markets, including many countries in Asia, adaptation is a more pressing concern. China is obviously the largest global emitter in absolute terms, although on a per capita basis, that's not the case. And then obviously we have many other smaller countries in the region. The adaptation financing gap, this was something we wrote about for our 2022 research piece on our anticipated trends for the year, being an increased focus on adaptation financing. There's some data from the World Bank that shows the adaptation financing gap in Asia is about $10 billion per year. So when we compound that going forward to 2050, that's a lot of lost investment that we're missing. We can just look, obviously, the devastating physical effects that have been happening just in the past month or so, right? Extremely low water levels in the Yangtze River, which is affecting power sector, transportation, logistics, agriculture. So we don't have to really stretch our imagination too far to see how important this adaptation issue is. And then in other parts of Asia, extreme flooding in Pakistan, and the region in Pakistan that's flooding was actually a city that was already under physical risk because of extreme heat. So all of these things are very tangible and real. I think when we're looking forward to the COP27 summit, the biggest question is going to be the role of the developed economies in helping to finance adaptation for emerging markets. But for China, that puts China at quite an interesting nexus. It's not in the category of fully developed markets, but at the same time, it has the financial capability to not only increase adaptation financing at home, but also potentially to use things like its Belt and Road initiatives to help spread adaptation financing to other parts of the developing world. So I think definitely we're going to start seeing that. What I think would be interesting if we're thinking about green bond issuance is a lot of the green bonds from the local government, the LGFVs that they call it, the local government financing vehicles. A lot of these green bonds are kind of very standard green buildings, renewable energy types of use of proceeds. Maybe there could be a policy initiative coming from the top in the Chinese government to increase the emphasis on adaptation financing. And then maybe we can see some of those LGFE green bonds focusing on things like, sea level rise, climate smart agriculture, infrastructure reinforcement, things like that, because those are things that are going to have a much more immediate effect on the quality of life for people living in China than the kind of more abstract, well, if we build a new kind of power plant, maybe the emissions will be lower. I mean, day to day, people do not necessarily see that, but they do see that their farm has been flooded or they're living in a drought condition. So that might be something that will influence Chinese policy making on climate after the COP27.
Got it. Actually, that's good to hear. I mean, sometimes a couple of years ago, I always hear these $1 trillion annual gaps to get to meet all the UN sustainability value. That's maybe a bridge too far for many people, but now that I'm hearing a more reasonable number of, still it's a high number. You said 10 billion per year adaptation financing in Asia alone, but that's probably easier to grasp for people and for developed markets and China to drill into. I think that's, let me just check. I'm checking whether there are other any other questions from the audience. I know that there were some here and there. Someone was asking very early on what the return is, a traditional bond versus a green, sustainable, social bond. Maybe, I know it's 101, but Jingwei, could you share a little bit around from a new investor perspective? What's the return? What's the difference? What's the risk versus a traditional bond?
Yeah, I can't really, I probably can just generally answer this question also from my our experience engagement with investor and also just from my own research. Because I think that just a while ago, I saw that some of the academic research was mentioning, like generally for the secondary bond market, green bond market in China, you get to see a 1.8 basis point of the premium for when you're issuing the bond. So also that means that the investor are willing to accept a relatively lower yield to hold this bond. And also, from our some other engagement, I've heard other bankers saying, the actual the discount may be a bit higher than this, like a 465 basis point. I think it's really up to, depends on different situation or scenarios. But overall, one of the things that why the Chinese green bond market is expanding so quickly, especially in the past 2 years, particularly in 2021, you got to see this, it's growing exponentially. The issuing cost is much lower in China compared to other markets. And that actually drawing a lot of issuers are willing to get into this process, and also by participating in the green bond issuers, and also get to see a much expanding issuers base that are trying to being part of this, and also some of other features other event, when we're inviting other the bankers or the investors being part of the panel discussions, a lot of them also mentioning that, once you're issuing a green bond, it's also much easier to get attention from the international investors to focus on the new bond instrument that came to the market compared to the traditional bond. That definitely provides a lot of benefits for issuers, actually to expand your financing channels and by getting broader access to the capital markets. So that all the benefits are coming together with all the, for the Chinese onshore market at this moment.
I'll just can I add something quick to that? There's a little bit of a distortion in the green bond market because you have policies like in Europe where asset managers are having requirements to report on the amount of green assets they're holding, to disclose their green asset ratios. So there's pressure for some institutional investors to buy them. And so the return is not the sole decision making on some of the decisions of buying this. And so that is creating a little bit of a issue where it may actually look like the return to the investor is worse, but it may be meeting some other requirements that investor has that is necessary for them to continue to operate right in that market. Or they may be trying to position themselves as a fund that is more compliant with the EU taxonomy or something like that. So either we need most of the major markets to have similar policies and then it will neutralize. But at the moment, there's a bit of a skew because the European buyers are not solely making this decision on price for each green bond.
Perfect. No, thanks for that additional insight for sharing. In the research report, one of your research report at Jingwei, I saw that banks are asked to include more ESG integrations into their lending practices. And how does it work in practice? Is a CBRC providing some requirements, and then the various banks will then implement it and then look at their portfolio ongoing? Do they meet it? Can you shed a little bit light around how that happens?
On the Chinese banks?
Chinese banks, yes.
Yeah, absolutely. Okay. I think they just if we're just comparing the size of green bond versus the green loans actually much bigger. Probably just on the market, 10% of the capital probably coming from the bonds at this point, but 90% actually coming from the green loans. And I think the government, from the policy perspective, it's just been really pushing in the past 10 years, been pushing on expanding the size of the green loans from the banks, the major 24 banks, really harsh. And so last year there's the policy coming out from the PBOC, trying to the new regulatory framework is now trying to consider also taking account in the portion of the green loans from the banks, really trying to, as part of the assessment for their macro-prudential, and also, the ranking assessment among of the major banks in China. So that actually provides enough of the incentives for banks to expand the scale of their green lending. And also, I mentioned before in my presentation that Chinese financial institutions, especially the banks, are the biggest holders, issuers of the green bond in the market as well. So the bonds that they got, the proceeds raised from the green bond issuance, actually, a lot of them are actually allocated into refinance the green projects through the green loan processes. So right now, the number we're seeing actually also quite positive. It's been expanding very quickly in the past 2 years. And also, so I think I also mentioned in my presentation that probably less than 10% of the banks overall lending portfolio are coming from green loans. And also we currently have some other research about the green RMBS, so that means the residential mortgage-backed securities, and the commercial mortgage-backed securities, as part of from the banks lending to those green buildings, and how they can be securitized into more of the green products, green financial products, considering the amount of the mortgages that are coming from the bank in their lending portfolio as more than 20% of that. That definitely provides a lot of more of the huge potentials for banks to securitize that part of the assets into the potential, green financial products. So I think the banks in the process has been constantly searching for green assets incentivized by policies, but also by its own mandates that have to continue to do so.
Looking for green assets. No, thanks for sharing. I definitely also see more innovation, more structured products in the whole sustainable finance. Maybe I can ask each of you just as a final call for action, 1 or 2 minutes, anything key message that you have for the audience or something that we didn't cover. Maybe I'll start with Jeff, and then Nneka, and then Jingwei, just a minute closing remark. Jeff?
Yeah, thank you. I'd like to thank PolyU for inviting me to participate in this panel discussion. I think academia, university students, professors are key part in building a vibrant markets. In this case, carbon markets. So I had the fortune of coming to PolyU 10 years ago to talk about carbon trading. I was working with a professor and Professor Liu included. So, 10 years later, I'm coming back. So I think education, getting students involved, right? Getting the professor, academia involved, research people involved is very important. I would like to continue, hopefully in the future, have opportunity to work with the students. Some of the students that attended my classes, my lectures 10 years ago, now are big player in carbon trading, in the broker-dealer sector. I was so happy, So again, thank you for the opportunity. I'm looking forward to more interaction with your faculty, eminent faculty and students in the future. Thank you.
Thank you for and passing your knowledge to the next generation, seeing that everyone is doing great, testament to your great teaching experience. Nneka?
I would echo a bit of what Jeff said. I think sustainable finance, it's such a rapidly developing area, and it is an area that could benefit from academic research and academic analysis. A lot of the people whose voices are loud in the sustainable finance space are also doing transactions or are investors. You know, they have a financial reason perhaps around some of the way they're viewing certain things. So I think the role for academia to really strengthen the rigor of some of the conversations that we're having around the structures that are available, the type of pricing patterns that we're seeing from a very independent objective, I think would be fantastic. So echo that, all of the students in the audience, academics in the audience, this is a really important area. It is not going to disappear overnight. So what you can contribute to it through your research and your intellectual capabilities would be very welcome. And I hope that this inspires you to get more interested in it. Thank you very much.
Thank you very much, Nneka.
Yeah, so for me, you know, the one last one to close the discussion. So I definitely along the way feeling very fortunate to be part of this ESG journey. So when I started my job on ESG research 3 years ago, the situation in Hong Kong, the market in Hong Kong wasn't like this, like right now before. So we definitely it's been a long way coming here, and I'll also see how quickly, rapidly the market has developed. So probably from my perspective, you know, as a relatively younger professional in this industry, you know, definitely being open to the audience, also being open and also, you know, utilize their intellectual capabilities and the thinking skills, analytical skills. So there are so many opportunities out there, just from, you know, consulting, ratings, research, trading, investment, banking, probably every aspect of the financial industry needs professionals to be part of this journey. And definitely this is a very exciting area to expand the horizon and the journey. So definitely, you know, it is a very exciting time to join, and also it's an exciting time to be part of this whole development in the industry.
No, fully agree. It's a great time to be in this way. I'm also very fortunate to be in this way. Thanks, Jingwei, and you're very humble. I mean, I learned a lot from your experience in China as well. I think it's definitely an ecosystem play where academia, consulting firms, rating agencies, traders all work together. I mean, this is already getting us to probably the end of our 12th already seminar series, and we'll have a bigger conference later this year. I hope to invite all of you again for that conference. And big thank you. I pass the mic back to Professor Wu.
Okay, thank you, Professor Lee. So thank you for hosting the discussion. It's very insightful, and I thank the three speakers, Jeff, Nneka, and Jingwei, for your excellent discussion. Actually, your discussion on the carbon neutrality and the carbon trading market and financing issues are also hot issue in our academic research. Our academic research cannot be isolated from the reality. I learned a lot of insight from you. I wish we have more interactions and exchange more ideas in the future. So as the Lapman mentioned, we will organize annual, end of the year, we will have annual conference as well. So we will have a maybe bigger conference. We will talk more about this issue in more details. So welcome all of you to join us again. Thank you. So I also thank our collaborating organization, HKII, for supporting the conference. This ends our 12th past seminar. So I look forward to see you all for the annual conference. So any other thing you want to say, Lapman?
No, I'm good.
Okay, great. Thank you so much. Thank you again. This concludes our seminar. I look forward to see you and enjoy the rest of the day.
Yeah.
Thank you.
Thank you.
Bye-bye.
Thanks, Nneka. Thanks, Jingwei. Thanks, Jeff.
Bye-bye.
Thank you.
Bye-bye.
Bye-bye.